Okay, we're live. Hi, Chris. Welcome to Venture with Grace.
Thank you. What's up, Grace?
So to start off the show, I would love for the audience to get to know you a little bit more. Per to joining Torch Capital, you worked at Red Sea Ventures and like Luminary Labs and Goldman Sachs. Why don't we start with maybe like you can tell us a little bit more about your learnings from early on in your career that you kind of took to Torch.
For sure. So I started my career in traditional finance and trading at Goldman Sachs. Spent a few years there in London, and then joined Luminary Labs. This is a while ago now, like 10-ish years ago now. Who are an innovation consultancy. But what we did specifically was help mainly government agencies stand up their startup investing programs. And so we worked with agencies like NASA, like Department of Education, and a whole host of others. And basically, they would give us a big pot of money and say, we want to see a lot more startups that are mission aligned, working on whatever it is that's important to us. And we would build and design accelerator competitions on their behalf, and we would allocate money on their behalf into sort of really like formation stage businesses. And so I helped run our Department of Education contract for 3 years, funded a number of early stage edtech businesses. We worked with Michelle Obama and her Reach Higher initiative. We had our accelerator demo days in the White House, which was pretty cool. And that was sort of my on-ramp to venture, where I was like, I love working with founders at like the true like 0 to 1 early stage. Ultimately, we were still consultants. We were kind of the suit in the room. And so venture was sort of this black box to me. And I was very intrigued. And I was like, I've done finance. I've done a version of consulting. I want to be near, a little closer to the action. And so venture was sort of the logical next step for me. And so I knew I wanted to be in New York. I thought early stage was what I wanted to do. And so I went to business school at Columbia. And really my goal was to get into early stage. I was very fortunate to participate in the Columbia Venture Fellows program, which paired me up with General Catalyst, Peter Boyce, now of Stellation Capital, formerly of General Catalyst. And I spent an awesome time working under him, sort of building out our thesis in consumer tech. And that kind of directly led me to Scott and Paul, shout out to them, at Red Sea Ventures, and spent a really productive summer and beyond. And again, early stage consumer tech focus, some B2B as well, but again, like consumer tech primarily. And it was really a combination of both of those two things that led me to Torch. I met John, my partner now at Torch, when we were on Fund One. And it was a combination of those two experiences. Like we were literally looking at some of the same deals, while I was at Red Sea. And so early stage consumer tech, New York based. It's not small, but it's sort of a tight knit ecosystem. So I guess we were bound to cross paths at a certain point. And that was 4.5 years ago. So I'm a principal on the investing team at Torch. We do early stage consumer tech investing. We're tail end of Fund Two. We just did a close of our third fund. Much bigger team, much bigger AUM now than when I joined. But yeah, consumer tech has always been sort of the through line. But I think what excites me about Torch, and I think what we'll probably get into, is that we define consumer a little bit differently than perhaps others, and that leads us in a bunch of really interesting directions.
Totally. I feel like one of the things that previously we chat about is like how you define consumer investing. Why don't we talk about since like consumer and B2B lines are blurring, can you give us like your definition of like consumer tech investing, and what is the different before I guess like prior to the AI era?
Totally. I guess for us, consumer is not just CPG. I think often CPG, food and bev, et cetera, gets lumped in with consumer. We view consumer as any company that touches an end user and solves their very specific pain point. And so that can be a nominally consumer-facing platform. It can also be a B2B platform that is selling into a person. And so when we're looking at the universe of what falls into that scope, it's a business selling a product or a service where the relationship with their end user matters. We also think that brand matters a lot, and brand can also be a competitive advantage at scale. But again, that's far beyond traditional consumer brands. brand matters in B2B, brand matters in even, bottoms up, well, especially in bottoms up enterprise sales businesses. So with that lens in mind, it takes us in a number of different directions. And to sort of clarify that, the way that we view the world at Torch is really three buckets where we invest. The first is consumer-facing technology platforms, whether it's fintech or healthcare, stuff that you and I might use in our day-to-day. The second is what we call consumerized B2B. So in that bucket falls SMBs and solopreneurs, and there's a sort of this whole class of businesses where the government treats you like a business, and you certainly have to file your taxes like a business, but you're not buying software like traditional enterprises are. There's a human on the other end of it, and sometimes these are like solo operations or like true SMBs, sub 50, certainly sub 20 employees. The way that they are marketed to, the way that brands are speaking to them, and the way that they make their purchasing decisions for what's going to improve their business lives and also their personal lives, that starts to resemble a lot more like consumer products than it does traditional enterprise sales motions. So that's kind of the second bucket. And then the third for us is infrastructure that powers any of the above. And so we spend a lot of time just in sort of pure infrastructure layers that are powering that end consumer experience. Again, consumer as we define it. So we think that line is increasingly blurred. We think that the tenets of building great consumer brands and technology platforms can be applied into those other categories. And there's a massive white space there. I think like we have a very specific set of skills and competencies at Torch, and we've been fortunate enough to be in some really great consumer tech brands and businesses that have gone on to exit and or many are now public businesses. But being able to apply some of those principles of building great brands far beyond the confines of traditional consumer is something that has become a bit of a calling card for Torch, and it's won us deals. Frankly, I think that particular lens is valued on cap tables and around boardroom tables, and so we found it really fruitful to, we're also a very collaborative fund. We found it really fruitful to sort of partner that expertise with maybe a fund or a board member that is very specifically just pure SaaS focused. When you marry those two together, that can be like a pretty beautiful combination. And to double click on the second bucket, SMB is the fastest growing part of the US economy as well. And so this is not just sort of a fluffy, nice to have. We think brand matters where like other people don't. Don't quote me on this, but it's something like 50% of GDP in the US today. Maybe it's like 45. There are like over 30 million small businesses in the US today. It's demonstrably the fastest growing part of the US economy. And so we think this is a really smart place to be spending our time.
Totally. I feel like, so there are a couple of things I want to double click on. Like one of the things is like, obviously AI is playing a huge part of the startup growth in general. There's more people could just leveraging AI to build a prototype within minutes instead of like hours. And later stage company, maybe, I guess like there will be lesser later stage companies as like people are, it's a lot more capital efficient to build like a successful tool in the earlier stage. What's your thought on like, how AI will technically impact like investing as well as like the, maybe tech company may not need more capital after call it like a Series A or something. How do you think about like who is going to be winning, let's say from like the investing angle, the investing game in the earlier stage, and then versus like which company do you think, like how do you evaluate the company beyond like the engineering forces? Because I live in Silicon Valley. I feel like I went to multiple like VC hold like I guess call it like a small engineering fair as an event. You attract a lot of engineers who go to these events for recruiting purposes. But I don't know. I'm curious about like what's your thought on that in the consumer tech space?
Yeah. So I believe very strongly that this isn't the hottest take in the world, but I believe very strongly that AI is changing everything. And I also believe very strongly that early stage consumer tech is the most interesting place to be within the sort of shifting tectonic plates of AI right now. And I'll explain what I mean by that. Firstly, from the early stage investing perspective, you're exactly right in what you point out. So I think the early stage funds, and I mean true early stage, I mean seed and even some pre-seed, those funds are best positioned to capture the outlier, like the real outlier 100x plus outcomes that AI is going to enable, for two main reasons. One is AI efficiencies are reducing the need to raise much more later stage capital. Basically, founders can do more with less. And it means it matters more than ever to be early in these deals that are going to generate these outcomes. And so I think that if you are a slightly more later seed or Series A or even B fund, looking to sort of just cherry pick the winners post seed and A, you might not get that chance. And so for a lot of these businesses, as they're able to scale a lot more capital efficiently, if you're not in early, you might not get in at all. And then the second piece of that is that being in early, the benefit is actually, or the advantage is actually compounded, I think, or will be compounded, where the money that companies do raise goes further, which means that as an early investor, your money gets less diluted. And so I think that true early stage investors are going to be really rewarded for that risk. And I think the upside is massive. So yeah, I think that being in early matters more than ever. And I think that those outsized, those real outlier outcomes are going to benefit those early stage funds. And I think, there's some famous examples like WhatsApp is one where, again, don't quote me on this number, but I'm pretty sure that they, at a time when they had north of 1 billion users, their engineering team was only 50 or directionally something like that.
I think the whole team is less than 50 or something.
Okay, even better. That sort of proves the point. But I think we'll see a lot more cases like that, which mean smaller teams, less need to raise outside capital, and it's better for founding teams and it's better for early stage investors. So I would expect to see a lot more of those examples, and I think that is why we're already seeing early stage AI deals are getting very hotly contested. And I mean, there's certainly some froth there, but I think that there's a reason, and that is probably the most profitable place to be playing. So that's sort of the early stage perspective. I also think that the consumer perspective, to me, and I'm very much biased and to some extent talking my own book, but I firmly believe this. I think that the consumer technology landscape is going to be more heavily and more quickly impacted by what's going on in AI. And what I mean by that is AI and LLMs have created this ecosystem that allows founders to iterate and to launch products very quickly, iterate on them, gather feedback quickly, and just do things a lot more capital efficiently with more data, and iterate faster than ever before. You've also got founders who perhaps 5 years ago or even 2 years ago could not fundamentally have been founders that now have tools in their hands that make them able to build stuff that they fundamentally could not have before. So you've got founders who maybe couldn't even have been founders a certain time ago. You've got other founders who can just do stuff more quickly and more effectively. And then when you look at within the consumer landscape, iteration has always been key to successful consumer products, and speed to market, speed of product development cycles matters more in consumer. The feedback loops are just tighter. You can gather data and insights from your users in any kind of consumer facing business much more quickly than you can in enterprise. It's sort of just can be like turning a cruise ship within enterprise, trying to truly innovate and gather feedback from your customers. There are obviously exceptions to that, but broad strokes. Your sales cycles are longer, and therefore your feedback loops can be a lot longer. I think that what we're going to see is that as time to market and path to market shortens, feedback loops will also tighten, and the time to product market fit will also reduce for the best startups. And so I think that everything that I just described is going to be all the more amplified within the consumer arena, where you are just able to gather more data more quickly and iterate and capitalize on trends and consumer attention, which can be fleeting. You're able to do that much more quickly than ever before. And I think that again, on the consumer facing side of things, ChatGPT had it, or AI had the sort of ChatGPT moment last year. And I think I consider that, and we consider that, really like an iPhone breakthrough moment. It was totally net new consumer behavior, and we saw a willingness to pay for it at a massive scale. They got to, whatever it was. It was like they scaled to 180 million users just last year. It's far bigger than that now. But I think that just the form factor of consumers being willing to engage deeply with an AI assistant and converse with it, and then ultimately pay for it, and then integrate it into all facets of their personal and professional lives, that is truly like a blank canvas iPhone moment on top of which massive consumer technology businesses are going to be built. So I think that both from a stage perspective and a sector perspective, early stage consumer is like a wildly exciting place to be right now.
Totally. I want to quickly say hi to the audience. Hi, Bilo. Anyway, so I wonder, so in terms of like, since AI is like making a giant impact into the consumer space, brands are becoming more important every day. Building a brand is extremely important, even for in the B2B space, or like B2C space. So I wonder, when it comes to branding for consumer tech, beyond what we call like the traditional, I guess, like there will be like TikTok promoting I don't know, like a let's call it like a therapy or whatever, or like TikTok promoting like Zapier. Like the other day I saw a Zapier ad. But anyway, so I wonder, beyond these kind of like the obvious channels, like I guess, what would you say would be the playbook for a tech company to kind of like stand out among the crowd?
Yeah. So that's a really important point, and it's one that we at Torch care a lot about. Again, being brand focused within consumer tech. Look, I think as the other side of the coin of what I just said about the proliferation of everything that we are seeing and are about to see, is that brand and authenticity matters more than ever, because in a world where more products are being created faster than ever, how do you cut through the noise, and how do you create trust, and how do you sort of cut through, answer the consumer choice equation where people are already inundated with too many products, and the velocity of new products is only accelerating. And that's a very positive thing, but that can be a little bit of a scary thing because there's a lot of shitty products out there. So I think brand has always been and remains the answer. The best tech and the most quickly iterated and shipped products are not enough alone. I think it's a necessary condition to win, but not enough alone. And so I think the key tenets of brand and great consumer brands and platforms have never been more important. And so when we think about the ways to actually do that, this is probably a good segue actually into what I was saying before about the commonalities between consumer and B2B. And I think that we're actually seeing a lot of those lines become blurred, especially when the user base is literally becoming blurred, when SMBs and solopreneurs are a great example where the growth of the gig economy worker is not a new thing by any means, but it is so pervasive now that we're seeing people are working side hustles, people are working like all kinds of ways of making money outside of a traditional 9-to-5. And when you stack up that sort of portfolio approach to a career, which is much more common now, those individuals start to resemble small businesses with a lot of different revenue streams. And okay, that's great when you're earning money in a bunch of different ways, but what does that mean when you come to file your taxes, or if you want to hire someone and manage all the nonsense that comes with that? Suddenly you're a person with a whole bunch of software needs that start to resemble businesses, but you're not going to buy enterprise level software. And so that sort of center of that Venn diagram is exactly where Torch gets excited, because we're asking the question, who is creating the suite of software tools and services for that class of business, whose needs might much more closely resemble consumer needs, and everything that goes into that around how you're designing your product, how are you speaking to your end user, how are you marketing it, what channels, which we'll get onto the question that you asked just before. All of that taken into account starts to look like a very different business than just the traditional enterprise business. So what do I mean by that? I'll give you one example. In the consumer land, we see a lot of influencer-led campaigns, influencer marketing. To take it even to its extreme, there is a whole abundance of celebrity-backed B2C brands, whether it's physical products or even just like consumer tech products. B2B businesses can use and are using like B2B influencers now as well. When you look just from a demographic perspective at who is buying software, the majority of those buyers, they're all on TikTok. If they're sub 34, there's like a greater than 50% chance that they are on TikTok. So as a B2B brand, looking for ways to reach not only the individual contributors who are going to be using your product, but also the end buyers, and often they're not the same person, you better be meeting them where they are. And so we're seeing a lot more B2B brands have TikTok presences. We're seeing a lot more B2B brands invest in things like podcasts and like in the whole B2B influencer world. So a lot of the same sort of tactics that have traditionally been confined to consumer world are sort of bleeding into the B2B world. Again, this opens up a whole new range of possibilities because it's going to take a very specific type of entrepreneur that can sort of thread that needle from both sides, and also the right investor base. Ideally, you want folks around your table that can kind of understand both sides, and we sit in the middle of that, which is really exciting.
I wonder, when it comes to like product launches, can you walk us through like maybe one company that have done a really good marketing campaign for their product and building a really strong brand from the moment that they were like a more earlier stage, just launch one product to their entire go-to-market strategy that to a certain outcome.
Totally. I'll give you a consumer example which has much broader implications in B2B world. So a business we backed and I'm on the board of called Creature Comforts. It is a modern tech-enabled vet clinic based in the UK. So there are some US brands like Modern Animal and Bond Vet and Pet Folk that have sort of proven out this model in the US. This is a very similar approach based in the UK. It is a beautiful brick and mortar vet clinic, tech-enabled with an app, making scheduling and telehealth and all of your veterinary needs incredibly easy, lower cost with a subscription price. All with just sort of an elevated brand and experience, whereas traditionally people are used to either a mom and pop vet or like some private equity backed roll up with just a shitty experience. And you walk in, you can't schedule online, you walk in, you wait for half an hour, the receptionist can't even speak to you, and then you might get the same vet 2 times in a row, you might not, and it just kind of sucks. So anyway, the business is Creature Comforts. They launched their first clinic about 2 months ago. They launched their second clinic literally this week. And what they did really well was, 1, building a brand ahead of launch, and 2, building up their waitlist. And the waitlist is something that is very much universal across both consumer and B2B businesses. There's some real nuance to it around like, what is the optimal time to launch your waitlist, to open your waitlist? What are the best ways to engage and nurture your waitlist? Again, if you have folks on a waitlist for 6+ months, they're going to get really bored and forget all about this product that you say you're launching. If it's too soon, they're not going to have enough time to actually deal with it and schedule an appointment if they need to. And so you need time for it to sort of marinate and sort of enter their consciousness. So that actually is a bit of a science in itself. During that period, you've got your email drip campaign, you've got like PR stuff you can do on the side. You've got, and this is something that Creature Comforts did a really good job of. They did, the founder Dan was on BBC Radio doing interviews and stuff, but like very targeted during their waitlist period in advance of their early sign up period. And so the second you flick the switch from waitlist to early sign up, like that is your like absolute absolute gold dust for high quality of conversions. And so timing all of your efforts and sort of having a coordinated marketing campaign with those times in mind is extremely important. What makes that challenging is usually when you are pre-launch and you have a wait list, it is rare that you will know down to the exact day when you're going to be able to launch. If you're shipping a software product, when is it ready? Do we want to launch with it at 80% versus 90%? What features are absolutely mission critical versus what can we sort of iterate on? In the case of Creature Comforts, it's a brick and mortar freaking building. So you're dealing with contractors, delays, and all that kind of stuff. But it's very universal, whether it's a brick and mortar consumer business or a B2B software business. Knowing exactly when you're going to be live and operational and what you can deliver for your customers on what date and what you can promise to and what they will hold you accountable to is actually pretty hard. And so again, that's like a little bit of art, not science. It's, launching in June versus launching on, June 17th or whatever. It's understanding exactly what feature set is going to be required to get conversion within that first couple of weeks. And again, I'll give you an example. For Creature Comforts, in the veterinary space in general, arguably the most highly correlated KPI for consumers to become subscribers and then customers is the availability of an appointment, the ability to schedule an appointment within 5 days. Because usually and even better, 3 days. Usually when people are engaging with a vet, it's because they want to schedule an appointment. They're not like, I'm going to sign up now and I'll schedule an appointment in 6 months. It's usually need-based. And so for Creature Comforts, it was extremely important to make sure that they had capacity and knew that they would have capacity. And again, you plan ahead for that over months and months and months. And so I think for any business, it's a case of understanding what is the most important feature of what you're offering your customers and what's going to create the fastest time to value. And similarly, what is the one thing that we can't fuck up? Otherwise, people are not going to convert and they're not going to churn, and they are going to churn and sort of go from there. So I think the waitlist example is a really universal one, and Creature Comforts. Shout out to the Creature Comforts team. Nailed that one.
Totally. So I have so many questions in the promotional waitlist related space. By the way, hi Christy. Christy is coming from YouTube. Sometimes I stream this on literally every platform, so people are coming from everywhere. But sometimes most times it only shows LinkedIn comments. So shout out to you. Anyway, so when it comes to building a waitlist or creating a brand for the company, couple of things I thought were pretty critical. One is what would be the benchmark you're judging from for Creature Comfort? Obviously, you mentioned about the waitlist, and I wonder how do you since it's such a important marketing game. So what I've observed other people are doing well is there's a couple approach. One is maybe you got the tier 1 TikTok influencer making TikTok video for you. Maybe this person will also make video for a million other people. And I guess how do you navigate? Do you work with an individual person in that space to launch a product, or do you pick a bunch of influencers to promote it everywhere, every platform, like a newsletter, a podcast, or a TikTok videos? And number 2 question is how do you I guess one thing about marketing is most of the marketing are non-trackable. It's harder to track a certain results. For example, you could hear Athletic Green on literally every top podcast, called Joe Rogan, Experiment, whatever. But the problem is it's really hard to attribute on these marketing campaigns. How do you qualify? How do you repeat your success in terms of marketing? And
question.
Yeah.
So I will answer this in a couple different ways. I will say it is highly specific depending on what exactly your goals are. And I'll give an example to illustrate that. With Creature Comforts, for example, the local geographical nature of it was incredibly important. And so building up community in the traditional sense of the word, not like online, like literal community mattered a lot more there. So this is an example where influencer, celebrity, that kind of stuff is not going to be most effective here, because what we're talking about is building like localized, authentic trust. So what worked with them was like literally local community events and like flyers and brand ambassadors. So brand ambassadors is an interesting one. This was super effective for Creature Comforts. And they were able to get a whole bunch of brand ambassadors. These are paid folks to just get out there and speak to their customers. And in the case of a veterinary clinic, speaking to your customers means literally walking around dog parks on the weekends or walking to a farmer's market and striking up a conversation with like every person that has a dog. So this is like a hyper specific, hyper local strategy. But that's exactly what a business like Creature Comforts needs to do to win. The approach is very different, but it's actually pretty analogous when you just think about speaking directly to your customer and sort of understanding who exactly are your first 20, 50, 100,000 users going to be, and what are the like tight knit communities, either physical or online, where you can reach them and speak to them and get early feedback and get their buy-in, and hopefully they can become your evangelists. So again, like the principle is the same, whether you're walking around a dog park giving out flyers for a vet clinic, or whether you're talking to like individual contributor engineers or CFOs or like whoever your community is that you're selling a product to. The premise is the same. And back to the convergence of these worlds, I think that we're seeing a lot more of these more consumer-y tactics working in the traditional B2B world, because these communities are a lot more identifiable and accessible online now than they really ever have been before. So a good example is Product Hunt, so shout out to ARC, one of my portfolio companies, and Basile, the chief revenue officer there, who is a go-to-market wizard. That's a great example. So ARC is nominally a B2B business. They're a banking and finance platform for startups. But I mean, just Google them. The way that they go about building their brand and building trust with their end users. Again, their end users are startup CEOs and founders. It really resembles more of a consumer branding and marketing exercise than it does like top-down enterprise sales. When they launched their ARC Platinum product last fall, and by the way, they're the only startup bank backed by Goldman Sachs and BNY Mellon, and so they have sort of the financial might of Wall Street combined with like real like Silicon Valley great software first experience. So anyway, when they launched their ARC Platinum product, they launched on Product Hunt, and so Product Hunt is a really good example of a hyper specific community that can be a really effective go-to-market channel if you know what you're doing and if you do it the right way. And what I mean by that is Product Hunt is a very powerful network and community of product and design forward, software curious founders, operators, and like individual contributors is how I would describe it. So it certainly does not make sense for all businesses to be launching products on Product Hunt. But if that is where your audience lives, and if that can establish credibility there, then it can be like super, super valuable. And so ARC decided that, that was a community they wanted to tap into. They're a product forward, design forward, delightful experience type business. And so being able to establish your credibility in a forum like Product Hunt matters a lot. They were number one fintech. They were number one on Product Hunt. They were number one fintech product. And so it was a hugely successful launch. But behind the scenes, it's a real coordinated effort, and there's a real kind of like art and science to it about how you activate your community to get those desired results on Product Hunt. And again, we're talking about a B2B business. They sell into it's business banking, like they sell into startups. But all these tactics we're talking about, and it includes It includes email marketing campaigns. It includes PR. Don, shout out to Don, is an absolute monster at PR. He's an incredibly compelling speaker who is always out there building, frontline relationships with founders and industry leaders. It's actually engaging with creators on Product Hunt. So Product Hunt rewards the frequency and the quality of your engagement on Product Hunt. So there are ways of gaming it, and there's some kind of like bullshit that happens, but in general, Product Hunt is like a really high quality filter for letting sort of the cream rise to the top, and it rewards real virality and organic engagement. And so that again is like you look at the best consumer products that take off with genuine virality and real high quality engagement and word of mouth. That's exactly what is rewarded on Product Hunt. And so that can be a really effective channel for B2B businesses, again, with the huge caveat that you need to know what you're doing and it has to make sense for you to speak directly to that audience. But it's another one of those channels that looks a little consumery, but can actually be great for B2B businesses.
I wonder, so like, since like there is, for a lot of B2B businesses, there's a lot of competitors, and obviously like leveraging Product Hunt or TikTok influencer is like extremely important. I guess like I feel like a lot of the I think after all, like in the end of the day, a lot of times like the product itself have to be differentiated. I wonder, like in terms of like the go-to-market strategy and the product itself, like how do you, for using maybe ARC as an example, there's other startup banks out there, wouldn't name names, but like there's a lot of like more like very well known in the Silicon Valley area. And I wonder, from the product launching strategy to the product itself, like I guess how do you, as an investor, how do you pick like which one to go after? And especially when there is certain like established like players in the industry already, how do you kind of like differentiate yourself versus like a lot of like other competitive products?
Totally. It's a good example. Look, business banking is super competitive. I think without wanting to get into like the super specifics, and there are a lot of great businesses and great products out there. I'm very biased, and to me, ARC is number one. I think what we've seen in the startup banking space over the past couple of years, and certainly post SVB, is that startups want really consumer grade software experiences that are intuitive, that are as easy to use as all the software products that those same founders and CFOs use in their personal lives. It should be easy. It should be seamless. It should be beautiful. That's table stakes. And they want safety and reliability. And look, we're like, Mercury is a great business, and it's a great product. We've seen in the last couple of days with everything that's going on with Evolve and Synapse, et cetera, founders value security. And that means both in the actual technology platform that you're engaging with as a consumer, but also the strength of their compliance and the strength of their partner banks underneath them. And it's no longer enough to just be a straight out of YC, super slick technology product. That's table stakes. But when push comes to shove, and when regional banks are going under and founders are worried about being able to access their money, as well as getting market leading, return on their capital, et cetera, safety matters, and reliability matters. And so that's why it's no joke that, ARC is the only startup banking platform that is working with, or that is backed by, I don't want to say too big to fail, but I guess, too big to fail, touch wood, institutions like Goldman Sachs and BNY Mellon. And so for us, again, it's being able to marry the financial heft and durability of institutions like them with real innovative, forward-thinking software experiences. And anyway, that is what that's what ARC is. That's what they're building. And so for us, but look, it all comes back to what I said earlier, which is understanding exactly who your end user is and what they value. And like I think ARC has nailed that pretty well. That is what customers value. Maybe over the time that changes, and maybe they get proven wrong. I happen to think they're going to be proven right. But it's all about just understanding exactly who your consumer base is and what they value. And there's subtle differences between a lot of these competitors as well.
I wonder, so when you see, um, let's call it like a ARC 1.0, or like, before they became your portfolio company, how do you diligence a certain company before they have built a certain brand, or like having any awareness, or like any product in general when you're investing in the early stage?
Yeah, I mean, so at Torch, we spend most of our time at seed. We do some pre-seed as well, which means that the majority of time when we're investing, there is a product, there is some level of data that we can interact with in diligence, but we are no strangers to investing pre-product. This isn't going to be news. Pre-product is team. Products change, business models can change, even like entire businesses can change, but the team stays the same, or usually, and that is who you're backing. And so references, before I was in venture, I've done references before when hiring people, before making big financial decisions. I don't think I really appreciated what a reference check means before you're investing in a founder pre-product and you're doing references on them. That's a real reference, and you're asking the hard questions. You're getting, like, if you're getting all positive references or all the same references, you're probably not talking to the right people. Like, you want some negative feedback. You want to know where to help them, where to push them. So that's kind of for me, that's kind of the be all and end all. I guess the more rounded answer is that actually, regardless of whether it's pre or post product, we've done this exercise internally at Torch about sort of looking at where we think our most effective early stage founders are, and what are common traits between them. Speed of execution for us is the most directly correlated to success, or at least early success. Many of these are still early businesses. There is no substitute for putting one foot in front of the other and shipping a product, or trying something. If it doesn't work, communicate it quickly and keep moving. And to give sort of the flip side of that, I think what makes me nervous as an investor is when the cadence of communication changes or decreases, or if you feel that hard things or difficult things are not being communicated as readily as the good things. That is like the reddest of red flags. At the early stage, like, half the shit's going to go wrong, and we want to talk about that just as much, arguably more than like the good stuff. So it's rare that is an issue, but in the positive sense, when founders are forthcoming with that, when they have the sort of both humility to understand that like plenty of shit's going to go wrong, but the determination and grit to understand that like most of these are going to turn into opportunities, and like, let's talk about this and move to the next step. That's what we look for.
I wonder, in terms of like, since like I feel like earlier stage, as you mentioned, like a lot of it is about the founder. How do you have like a certain area that you're most passionate about that you would be, when I guess like hunting, and then like, or if it's more because of like the founder is like coming from a really interesting background and all that kind of things. And I wonder, among the founders, I guess like from all the different sourcing strategy, what would you say would be the one that you find the most like deals that you eventually investing in? Would it be like, outbound, or like would it be like just like sourcing through the inbound and then doing reference checks when you see someone that you kind of within like network that you're looking after?
I mean, to answer your first question on like where I'm most interested in, well, actually, to answer all of them at once. Look, I think like at early stage venture, at least in my opinion, the hardest part of the job, or certainly one of them, is trying to balance being proactive and reactive. Like, I could fill my days 7 days a week with just looking at stuff that gets sent to me, or people that reach out to me, or founders introduce me to someone, or other investors introduce me to someone. And often that is great, but you can't just be entirely reactive. You have to have a perspective, a prepared mind, do your own work, reach out to people that you think are interesting, and sort of unearth your own stuff, and find opportunities that way. So it's a constant sort of tussle between being proactive and reactive. Look, different firms have different philosophies. Some are 100% on
I
either.
guess. Yeah, I'm sorry. Like, I feel like my question is so general. Like, I think I was thinking about like a complete different question. Sorry. Like, I want to
No,
unpack
go for
a
it.
little bit. Okay, so I feel like living in Silicon Valley, a lot of the times, like I would say the investor are focusing on like if the engineer having the right quote unquote background. For example, are they coming from like a hot AI company, like lead engineer, or like the CTO of like a previous AI
Oh,
company
I see.
that
I see.
sold and
Yeah.
that kind of things. And I wonder, or like since like we were just talking about like AI becoming the game changer of how people building a company, especially in the consumer tech space, and maybe like people don't need that much technical differentiation to like build a successful company, called like the Airbnb of the world. Like maybe like it just require like the most basic technical talent to build something. Not basic, obviously it's a really big company now, but
Yeah.
when you just getting started, like to put together a traveling app, or like a hotel app that isn't like that hard, I guess, like using AI these days. Like, because I feel like maybe I'm like, because of I live in Silicon Valley, so a lot of investor would invest in like people who are building the model from the scratch, and like or building like a coding tool, like that's just like an AI coding tool related things that requires a lot of like capital to even um just like getting the GPU setup or something. So like that's maybe very different from like coming from New York, where people having a more diverse background in general. I wonder what would be your approach when it comes to examining if the technical talent would take over the world versus like would it be differentiated by the distribution go to market. And if it's a go to market, like how do we find, like what is a team is like made up of, since like ARC would be a good example of like the financial people work in the finance industry building a finance product. But I wonder, how do you examine like every other category, for example the pet category or like some other categories?
Yeah. It's a really good question. I think that look, AI is lowering the barrier to entry for any company, and like I said earlier, people are now able to become founders who fundamentally like would not have been able to otherwise, and that's an awesome thing. So I think the size of the pool is increasing. With that, you're obviously going to get a variance in quality, and it's back to what I said earlier, that I think brand, and therefore, as you just said, go to market and distribution is what's going to give an edge in a world where products are easier to spin up than ever. What's going to give you the edge? It's obviously those. That is very much where we spend our time and what we're focused on. And look, at our stage, it comes back to founders. So much of it is that. And so look but it's not just do they have marketing chops, or have they sold this kind of product before? Take Creature Comforts. The co-founders of Creature Comforts, Dan and Russell. Dan, visionary, has raised money for a massive consumer real estate business before. Very successful outcome for that business. Russell was a vet and has built and scaled vet practices before, and is incredibly operationally focused and knows how to open these businesses, scale them, even exit and sell them, and knows how to operate them at north of like 30% four-wall EBITDA margins, which is absolutely like industry leading. And so for this business, this is one where I would probably not feel comfortable just backing like two young, smart Stanford grads, maybe gone through YC. Like that's not the right profile for this kind of business. You need real marketing chops and being able to build an incredible brand around it, which they have. But just as important is real operational expertise. This is a capital intensive brick and mortar business. Like ultimately it is. It is tech enabled with unbelievable margins, and an incredible path to scale with like a sort of ready-made set of willing acquirers, which makes that incredibly attractive for us. But there's no getting away from the fact that they're there's on construction sites. And so it's a very different, set of founders. To take to the sort of other extreme example, we've been spending a lot of time in the AI avatar space. So what are the ways that consumers are engaging with technology? So imagine a world in which, when you're dealing with customer service, you're not speaking to a chatbot, you're speaking to a perfectly photorealistic person that can infer your emotions and your facial expressions and can speak to you literally just as human-like as you're speaking to me right now and solve your problems. And I mean, like, using genuine reasoning, not just routing you to a series of options behind the scenes, which is essentially just what's been going on in voice technology for customer service for decades. There are a number of really interesting companies popping up that are creating this infrastructure. And so we're investors in a business called Anom, which is doing the two-way real-time photorealistic avatars to allow that conversation. So maybe there's a world in which I do a podcast with like AI-powered Grace who can speak to me and come up with questions and like infer stuff on the fly. In this case, the two founders spun out of Synthesia, the text-to-video business. So that was a case of like perfect founder market fit, where they've seen this, inside the belly of the beast, and have decided that real-time two-way is the way to win here. We happen to share that belief. And so founder market fit, it's a engineer paired with a salesperson. He can build it, she can sell it. It's a pre-seed business, and it's very early days, but so far, they're moving incredibly quickly. So again, in terms of founder market fit, like, it looks very different across different sectors, but I think you're very right to point out that the sort of aperture is much wider now in terms of who can enter that top of funnel. But in terms of how you sort of whittle those options down, it really comes back to the same as before. And I guess in that sense, the lens isn't really changing that much. I just think the sort of velocity and volume of potential options is like drastically increasing. But the principles are still the same. And as you very correctly pointed out, it's brand and go to market. That happens to be where Torch specializes and what gets us excited. But we think that is how you cut through the noise. And that is how you that is where the winners are going to come from. And I think what we're seeing in AI right now is that a lot of winners are kind of being anointed already, or, winners. It's just too early to say. And a lot of these valuations are going to go up and come down, and some of them don't even have revenue, and some maybe will never have revenue. But go to market, brand, building trust with your end users. For us, that's sort of the be all and end all.
I wonder, so let's say I'm just gonna use an imaginary example. Let's say if you find, let's call it like two founders from let's call it an event, and then they have built a company that they like, maybe like one of the founder had some like experience in like expertise in some other area, but they have like execute a business and like sold a business or something, but they're building in something in a completely different industry. And like for these kind of team, and then like maybe you mentioned about like the Sensatia people building something in the Sensatia space, basically that's a lot more relevant. But like for the founder, they seems like pretty great, but they have built something in a different space, and now they're coming to you with like a brand new idea of something they have never built before. But obviously they seems pretty smart. And like, I guess, like, how would you examine the founder product fit? And then what would be like the question you ask? What would be the diligence process even look like? Because if you're writing, let's call it like a small track, and then you're like DMing their entire like work ecosystem, like maybe they will find a little bit like uncomfortable. I wonder like how does a diligence process would look like for the background check of the founder, and then what would you be even like asking their past coworkers to describe a scenario that they worked with them, and how do you even know if their work had like a really, maybe like call it like a mid to bigger size company, how do you even know if who is their coworker? And if you spam too many people on LinkedIn, wouldn't that be like a challenge for the founder to like
Totally.
trust you in the first place?
Yeah. So I guess first part of the question is like how we look at founders who have expertise in one space, but maybe start building in another space, or build something here, but now want to build something there. Honestly, that actually gets me more excited. If someone has built something in some space and then is building.
Let's call it like if they were building in the crypto space, now they're an AI founder.
I see what you've done there. Look, there are two flavors of that. One is you are chasing heat and you are perhaps building for the wrong reasons, and maybe there's not a huge amount of authenticity between you and the product you're building, and you're sort of jumping from one thing to another. Not interesting. Another is you have your sort of finger on the pulse. You are building quickly. You are experimenting with what is changing in the market, how consumer behavior is changing. You're observing stuff going on, and you are identifying areas where you can build something really big. And if that changes a couple times, then like fucking great. It really comes down to more of a personality or mindset thing. If it's in category 2, I'm super interested and want to talk to you. But if it's, I think we asked earlier, part of it was like if you're a repeat founder or repeat builder, I'm really interested in that versus like specific domain expertise. That can be learned. Look, in some areas, it's more critical than others. Like Creature Comforts, we probably wouldn't have invested if there had not been a vet around the table. But again, like those two people can meet and become co-founders. But having the real operational expertise and just scar tissue from building something before, even if it's not gone well, that is incredibly valuable, just because, look, I've backed a ton of first-time founders and multi-time founders. The scar tissue, both good and bad, that you get from building something is extremely difficult to replicate. That is much harder to build than it is to get deep expertise about a certain industry. And that can also be hired for as well. But yes, you are correct to point out, with I think a hint of skepticism, the sort of people that might be jumping from crypto to AI, perhaps for the wrong reasons. That interests me a lot less.
I wonder, let's say like if the founder just met their co-founder, or like they met their co-founder through events, or something random, not like, their best friends is like 5th grade and then they have built like 6 things before.
I mean, and you just reminded me of the second part of your question, which I didn't answer, which is about like how you sort of reference and get a sense of people. Look, this is all part of the deal when you're investing early, as we do. If you want all of that to be de-risked, then like you should probably wait for a Series A. Plenty of seed companies or pre-seed companies, like maybe the founders just met, maybe they've been like hacking together on the side for a little bit. Again, like all of those cases can be solved for. Look, would I prefer that a founder or two co-founders have like worked together in a previous job and have like done a side project together and they know each other's strong points and failure modes very well and have a close working relationship? Like, sure. But it's not always going to happen. And so we've backed folks at more like formation stage. And yeah, references matter even more then. And so to your question, speaking to as many people as possible to get as rounded a perspective as possible is key. People will often provide references, do those, but then find your own. You correctly point out, it's hard to just like blast people and reach out cold. We use the network. Our network is super powerful. Like, it's pretty rare, if we're looking to invest in a founder, that we're not at least, we're not like 1 degree of separation away from some relevant person, maybe someone's manager, maybe someone they managed, maybe a previous investor or something like that. You just got to get all sides of it. And so we lean in really heavily to those, trying to get a sense of, if they were building something before, what happened? And if it didn't go well, it wasn't a great outcome, like, great. Sometimes it can actually be a positive. But really understanding, did they act with integrity? Would a previous investor back them again? If they had a manager at a large company, would that manager write them an angel check if that's their thing? As no one ever wants to give a bad reference unless like something's actually gone wrong. And so, you find ways to tease that out. Instead, if I were asking about, you, Grace, and I wanted to know, I would say, instead of asking what does Grace suck at, I would say, what is Grace an 8 out of 10 at? And they would say something, whatever. And then I'd say, what's Grace a 5 out of 10 at? And that's a way of just getting them to tell us, okay, here's what I think she's actually less good at, in a way that isn't just asking what does she suck at. And so that for us is just the most important thing.
Totally. Would you say, so for example, for the founders who are building in some place, let's say the founder built a prototype, but obviously the prototype have less of like a I guess like it's harder to make money from their prototype, as like they're not really like the bestseller or something.
Yeah.
Like they didn't really receive like a certain level of success, but like you feel like the founders seems like pretty smart. Like how would you do the judgment call on like if they actually have the chops to actually sell something?
There's two pieces of that, right? There's like, is there demand for people to pay for this, and can the founders execute on that? Can they sell it? So I think those, you got to kind of break it down into those two component parts. The first can just be sort of diligence by yourself, right? If there are customers out there, speak to them, or would-be customers, speak to them. And
what if the customer are actually, they are in the negotiation of contract with other people? Let's say they're like, oh, here's like 50 coming in our pipeline, but did you close them? Like, no, but it's also so little time, we're still building this product.
Look,
How do you evaluate the contract? Are they just like gonna go to zero, or they're actually chatting with them?
It's a really good question. And like this stuff gets it's nuanced and it's kind of sensitive, because you're right. You can't, someone has a pipeline of 50 companies. Sometimes it's very delicate and you can't really speak to, you don't want to, that's a lot to impose on an early stage founder. If you want to say, hey, get me on the phone with your like top lead customer that you're about to convert. Sometimes they can though, which is great. And sometimes that's actually a really good sign where look, ideally some of your early customers are also going to be like evangelists. And sometimes maybe they're your first customer because you knew them before, or because you used to work at that company. And maybe the pain point because you used to work at that company, kind of thing. So often the earliest customers will actually be very happy to get on the phone with you and talk about why this is great for them. So that's sort of number one. Number two is, again, back to the power of the network. We believe very heavily in this, and we have a phenomenal network at Torch, whether it's just our team, our founder base, our advisor and LP base, which is incredibly vast and strategic. Our view is, if we don't know the right person, we know someone who does. And so I've yet to encounter a company, either that I've invested in or just a diligence process, where we've been scratching our heads being like, I really wish we could talk to a potential customer, or just someone who looks like this customer. It doesn't have to be the exact one in the pipeline. That's honestly never happened. And I think if it did, we're probably not doing our job right, because you can always get to someone who can get to someone. And it's a case of like, there is no substitute for getting on the phone with the stakeholder and asking them about their specific pain points. How much would they pay for this? All that kind of stuff that you do in customer discovery. Founders you can spin it one way and you can hear from someone, hearsay. You got to speak to them yourself. And that is something we hold very dear at Torch. And there's always a way to find them, is my view.
Okay, so I want to be mindful of time. I have one real question and then 1 minute fire round for you.
Okay, great.
Okay. Last real question is like, I think you mentioned a really good point about like LPs being like a part of the diligence process. Like, since if your LP like are like, obviously they're likely to be very high profile, busy people, how do you make sure that they actually help on the diligence side? Or how do you like kind of incentivize them to like, chime in or like be more active, since they're probably super busy people?
I think we're very fortunate with this at Torch, but it's also very deliberate. So John, my partner, when he started Torch, and we've cultivated this since then, we've been very deliberate about bringing on LPs who are not just checks, who are actually strategic partners for us. And that ranges from large institutions that we're very fortunate to have backing us, to large family offices, to founders and individuals. And a lot of those have really been hand selected across all the areas that we invest in. And we treat them like family, and they treat us like family. And so we work with them extremely closely. And so when there is, if I'm diligencing a fintech infrastructure deal, I know exactly who my first call is going to be. If it's prop tech or within real estate, I know who my first 3 calls are going to be. We have great close relationships with them. We love working with them, and they're really extended members of the Torch team. And look, it leads to better outcomes. And, our job is to make them money. And if they have nuggets of insight or connections or networks, which most of them do, because they are like industry titans, it's win-win.
At the end of it, I'm gonna ask a quick 1-minute fire round. What's your favorite book?
Oh, yikes. You didn't prepare me for this one, Grace.
Sorry.
With a heavy dose of recency bias, only because I reread it recently, maybe Kitchen Confidential by Anthony Bourdain, just because I love everything food and cooking. It's just been on my mind.
Who would you invite to your dinner party?
How many people am I allowed to invite?
It's your party.
Oh, wow. Okay. I can probably fit like 1, 2, 3, 4, 5, 6 people here at my dinner table. All right. Well, I have to choose Anthony Bourdain. I would choose, the soppy but true answer is my grandfather, who was the most interesting person in the world. And he translated the telegrams between Khrushchev and Kennedy during the Cuban Missile Crisis, and was semi-responsible for the world not exploding, had an unbelievable life, and I want to know more about it. So I would invite him. I would invite Jude Bellingham because I'm a huge England soccer fan and I love that man. And I don't know, I'd stop there for now. It'd be an intimate 4-person dinner.
Who made the biggest impact in your career?
Oh, wow. Fucking hell, hit me with the real ones at the end. I would say two people. Firstly, my dad, who I think gave me all of my work ethic and values, that you work hard, do right by people, whether it's founders, whether things are going well, whether things are going badly, but you treat people the right way and you don't be an asshole, and good things happen to you. That's number one. And then number two, I gotta say my partner, John, who gave me a shot at Torch like 4.5 years ago. And we've done a lot since then.
Where can we find you outside of work?
Ooh, usually in my kitchen. Well, I mean, you can't actually find me there. Please don't, please don't break in. Usually my kitchen or running in Prospect Park. I love running, especially when the weather's nice. Or watching the Euros, watching the soccer right now, which is what I'm spending most of my time doing when I'm not working.
Amazing. Well, Chris, thank you so much for coming on the show. It was a fun chat.
So nice. Thank you so much for having me.
Okay, quickly saying hi to the audience. Hi, Kins. I don't understand Japanese, but assuming it's good things. Anyway, we're ending.